Unlocking the secret of real estate investing. Your path to wealth. Have you ever wondered how people build wealth through real estate? What if I told you that investing in property could be your ticket to financial freedom? Today we're unlocking the secret of real estate investing, how it works, how to start, and how you can build a fortune with it. Sound familiar? I knew there had to be a better way to build wealth, and that's when I discovered the incredible power of real estate. It's not about getting rich quick, it's about building lasting wealth and securing your financial future. In this video, I'm going to break down everything you need to know about real estate investing, from the different strategies you can use to the mistakes to avoid. So let's dive in. Look, real estate has minted more millionaires than almost any other investment out there. Why? Because it gives you multiple avenues to build wealth, not just one. First off, you've got cash flow. Think about it. You buy a rental property, and every month your tenants are paying you rent. That's passive income coming in month after month like clockwork. Then there's appreciation. Over time, real estate tends to go up in value. It's like watching your money grow while you sleep. Plus, you're building equity with every mortgage payment you make. And let's not forget about the tax advantages. The government actually gives real estate investors some pretty sweet tax breaks. But here's the real kicker leverage. With real estate, you can use the bank's money to buy an asset that generates income and appreciates in value. Now, real estate investing isn't a one-size-fits-all game. There are tons of different ways to invest, each with its own pros and cons. First up, we've got rental properties. This is the classic buy-and-hold strategy. You buy a property, find some good tenants, and collect rent every month. It's a great way to generate passive income and build long-term wealth. Then there's house flipping. This is more of an active strategy where you buy undervalued properties, fix them up, and then sell them for a profit. It can be a lot of work, but it can also be very lucrative if you know what you're doing. If you're not ready to be a landlord, you can always invest in REITs, or real estate investment trusts. These are like mutual funds for real estate. You invest in a company that owns and manages properties, and you get to share in the profits. It's a great way to get exposure to real estate without actually having to own any property yourself. Want to be part of the sharing economy? Short-term rentals like Airbnb are booming. You can turn a property into a vacation rental and potentially earn a lot more than you would with a traditional long-term rental. And then there's commercial real estate. Think office buildings, shopping malls, warehouses, the big leagues. Each strategy has its own unique set of advantages and disadvantages, but rental properties are definitely one of the most solid ways to build lasting wealth. Okay, I know getting started in real estate investing can seem daunting, but trust me, it's totally doable. Just follow these steps, and you'll be well on your way. Step 1. Educate yourself. Knowledge is power, people. Read books like Rich Dad, Poor Dad by Robert Kiyosaki and The Millionaire Real Estate Investor by Gary Keller. These books will give you a solid foundation in real estate investing. Step 2. Set a budget. Don't even think about looking at properties until you know how much you can realistically afford to invest. Figure out your down payment, closing costs, and monthly expenses. Step 3. Choose your strategy. We just talked about the different types of real estate investing. Which one aligns best with your goals and risk tolerance? Step 4. Research the market. Location, location, location. You need to find areas with strong rental demand, job growth, and the potential for appreciation. Step 5. Secure financing. Unless you're sitting on a pile of cash, you're going to need a mortgage. Shop around for the best rates and terms. Step 6. Find the right property. Look for undervalued properties with good income potential. Don't be afraid to negotiate. Step 7. Close the deal and manage wisely. Real estate success starts with a solid plan and a willingness to learn. Here's the thing about real estate investing. You don't just make money in one way. Savvy investors have multiple streams of income coming in. First, you've got your rental income. This is the bread and butter of real estate investing. Every month, your tenants pay you rent, which covers your mortgage, expenses, and hopefully puts some cash in your pocket. Then there's property appreciation. Over time, real estate tends to increase in value, especially in desirable areas. This means that your property is essentially becoming more valuable, even as you're collecting rent. And don't forget about equity growth. With every mortgage payment you make, you're paying down the principal balance of your loan, which increases your ownership stake in the property. And let's not forget about those sweet, sweet tax advantages. As a real estate investor, you can deduct expenses like mortgage interest, property taxes, insurance, and even depreciation. This can save you a ton of money come tax time. And finally, there's leverage. Remember how we talked about using the bank's money to buy an asset that generates income and appreciates in value? That's leverage in action. Host, on camera. Real estate is all about making smart investments and being patient, but even the most seasoned investors can make mistakes. Real estate can be a fantastic way to build wealth, but it's not without its risks. In fact, a lot of new investors lose money because they fall into common traps. So, let's talk about what to do. Mistake number 1, skipping market research. This is like trying to fly a plane without a map or any instruments. You need to know the area you're investing in like the back of your hand. Mistake number 2, underestimating expenses. Don't just focus on the purchase price. Factor in things like property taxes, insurance, maintenance, vacancies, and property management fees. Mistake number 3, overpaying for a property. It's easy to get caught up in the excitement of a bidding war, but overpaying for a property will kill your profits. Know your numbers and stick to your budget. Mistake number 4, ignoring property management. Managing a rental property can be a real headache. If you're not cut out for it, hire a property manager. It'll save you time, money, and a lot of stress. Mistake number 5, not having an exit strategy. What's your plan if you need to sell the property quickly? What if the market takes a downturn? Always have a backup plan. Host, on camera. Real estate is a powerful tool for building wealth, but you have to be smart about it. Alright, so you're ready to start investing in real estate, but where do you buy? The best markets for real estate investing are those with strong economic fundamentals. Think job growth, population increase, and a healthy demand for housing. Fast-growing cities. Look for cities that are experiencing strong economic growth. These cities tend to have a high demand for rental properties and a greater potential for appreciation. Affordable markets. You don't have to invest in the most expensive cities to make money in real estate. In fact, some of the best returns can be found in more affordable markets. Low property taxes. Property taxes can eat into your profits, so look for areas with reasonable property tax rates. High rental demand. The more renters there are in an area, the easier it will be to find tenants for your properties. Host, do your research and choose a market that aligns with your investment goals and risk tolerance. Before you embark on your real estate investing journey, keep these essential tips in mind. Tip number 1, start small and scale up. You don't need to buy a massive apartment complex right out of the gate. Start with a smaller property, learn the ropes, and then gradually expand your portfolio. Tip number 2, network with other investors. Surround yourself with like-minded individuals who can offer support, advice, and valuable insights. Join real estate investment groups and attend industry events. Tip number 3, think long-term. Real estate is not a get-rich-quick scheme. It's about building lasting wealth over time. Be patient, stay consistent, and don't get discouraged by short-term fluctuations in the market. Tip number 4, always run the numbers. Before you buy any property, make sure you crunch the numbers and calculate your potential cash flow, expenses, and return on investment. Tip number 5, stay educated. The real estate market is constantly evolving, so it's crucial to stay up to date on the latest trends, strategies, and regulations. Host Real Estate is one of the most powerful vehicles for achieving financial freedom, but it's not without its challenges. So, there you have it. The roadmap to building wealth through real estate. Remember, it's not about getting rich quick. It's about making smart, strategic investments that will pay off for years to come. Do your research, connect with other investors, and don't be afraid to ask questions. The real estate market is full of opportunities, but you have to be willing to put in the work. So what are you waiting for? Get out there and start building your real estate empire today.